Namaskar. In this session, we'll discuss a very important topic of accountancy, that is depreciation. What happens? Business entity, they acquire some assets, they purchase some machinery, they purchase some land, they make some buildings, they purchase some vehicles. So different types of equipments, machinery, vehicles, buildings, they purchase, acquire, or construct. Everything, whether TV or mobile, everything is having some life span. 1 year, 2 year, 3 year, 4 year, 5 year, 10 year, 15 year, 20 year. Some life span is there. So as per the like bike life span is given 15 years. So registration is done for 15 years. So like that, every year when you go for insurance for your bike or car, the insurance company will make the valuation lesser. First year car valuation is 8 lakh. Second year it may come to 6.5 lakh. Third year it may come to 6 lakh. Valuation is coming slowly down because of end regions. In other cases, if you purchase some plot in busy area, in highway area, in metropolitan area, when you purchase some plot for 1 crore, next year, because of hike in the land rates, that may cost 2 crore also. So here appreciation is there. So somewhere in business area, somewhere appreciation may be there and somewhere depreciation may be there. Both are related to assets only, not the movable item. Both are related to assets only. So when value of the item, not cost of the item is same. What was the purchase price? When value of the item is estimated at lower cost, because of what are the reasons that we'll understand here. So when the value comes down, that is known as depreciation. For that there is some rule, there is some pro forma, there is some standard. Every year 5%, 10%, 15%, like that. So any fixed asset that is acquired by a business is subject to wear and tear and obsolescence over a time. So this decreases in monetary value, and that is calculated by a measure in accountancy referred to as depreciation. So depreciation is done mainly because of wear and tear. By usage, the item slowly that value comes down. So what is the need for depreciation? Till now we have understand depreciation. Depreciation means decrease in the value of the item. When truck was purchased, it was for 20 lakh rupees. After 2 to 3 years, because of wear, tear, and use, that cost has come down to 15 lakh rupees. So that is the depreciation. So what is the need for providing depreciation in accountancy? While doing the accounting in the unit, a business entity, what is the need that we have to understand? The first need is determining actual profit or loss. What happens? Huge amount is spent in acquisition of land, in purchase of machinery, in purchase of vehicles, different equipments. Huge amount is spent, and it is expected that it is going to last for certain period of long span, 10 year, 15 year, 20 year, 30 year. That some span is decided. So what happens? Every year that value is decreasing. So that decreased value has to be reflected in the account. Otherwise, profit and loss account will not match. Profit will be seen more, which is not seen, which is not there, because value of some items has come down. So that is why to determining actual profit or loss. Second is provide unbiased view of financial statements. If depreciation is not taken into account, then visibility of profit will be very higher. It will give a wrong view of financial statement. Cost of production, certainly cost of production will vary because of the wear, tear and repair of the items. When the machinery slowly gets older, repair cost increases. Value of the machine is coming down. So cost of production is somewhere affected. Production cost includes the depreciation charges on machinery and plant and other similar assets. Number fourth is distribution of dividend from the profit. If depreciation is not accounted for, profit will seem to be very higher. And if profit is seen to be very higher, which is not correct. So if profit is seen to be very higher, the distribution of the dividend amount will increase, and distribution of dividend amount results in movement of capital away from the business. The fifth point is funds used for asset replacement. What happens after 5 years, 10 years, 15 years? That asset becomes obsolete, old, and for unusable. Beyond economical repair, BER. So when they become beyond economical repair, that machinery has to be replaced. That vehicle has to be replaced by new one. For that, from where fund will come? So for to cater that fund also, depreciation is taken into account. Tax consideration. If depreciation is not reflected in the accounting system, then profit will seem to be higher. And when profit is seen to be higher, tax liability will also be high. So depreciation is shown on the actual basis. So profit, whatever profit amount is there, that reduces to the extent of depreciation. And tax liability is also accordingly reduced. So now, what are the causes of depreciation? Why depreciation happens? It's a big question. So everybody knows, as I have earlier itself I have stated that every machine, every vehicle, every tool has some lifespan. It goes for 1 year, 2 year, 3 year, 4 year, 5 year, depends upon the item quality. So by regular use of assets leads to decrement that reduces the value of such assets. Regular using the vehicle, truck carrying daily. So regular using the vehicle. So tire, tube, engine, body, these all are slowly getting affected because of regular use. Then expiry with time. Certain items are given some time limit. After that period, that expires. That is government regulatory. Obsolescence. What happens? Technology is changing very rapidly. Whatever yesterday TV we are using, that CRT TV backside this much back area, that TV was consuming high voltage. Thereafter LCD came. After LCD, now LED has come. Now there is no consumption of power at all, and visibility clarity is very good. So that old CRT TV may not have exhausted. That old model CRT TV may be working, but now it is obsolete. So there is need to change. Then legal right expires. Yes, many items are fixed for time bound, and if legal right expires, then there is way of depreciation. Accident, and it is proportionally accepted to vehicles as well as machinery. If some accident happens, then machinery gets damaged, the vehicle gets damaged, and that causes depreciation. Now, what are the factors affecting amount of depreciation? On what basis amount of depreciation is decided? So number one is cost of asset. How much cost of the asset is there? Accordingly, depreciation amount will vary. Then estimated useful life. We have to estimate if some item is of 100 rupees and estimated life of 10 years, then accordingly 10 rupees we can reduce. After 10 years, that value is 0. This is called depreciation. So estimated useful life is used to decide the depreciated amount. Then estimated scrap value. When I told that after 10 years that TV value will be 0, at that time that TV becomes a scrap. So that a scrap person, how much he gives? 1000 rupees, 500 rupees, how much he gives? On that also it depends the depreciation amount. If it is gold, then that amount cost will increase. There will be appreciation. There will not be depreciation. So after 10 years, gold value will increase. So if it comes in a scrap also, scrap means somewhere some broken, that gold item broken. In a scrap value also, gold is having higher value. So in that case, there may be very less depreciation or no depreciation. So that is why it is depending upon the estimated scrap value. Then effect of depreciation on profit and loss account and balance sheet. Whatever depreciation we are accounting for in the accounting system, how is it is going to affect the profit and loss account and balance sheet. So as far as profit and loss account is concerned, it reduces net profit by increasing the debit column of P&L account. So it is reducing the net profit. If depreciation is shown in profit and loss account, then it reduces the net profit. What else? Surplus of debit balance occurs. Why? Because debit is increasing. So surplus of debit balance incurs. As far as balance sheet is there, it leads to reduction of book value. Yes, every item is having some book value. And that book value is decided every year based upon the depreciation. Earlier it was 5 lakh, now it's 4.5 lakhs. So reduction of book value in the book the present cost will be retained after deducting the depreciation. So reduction of the book value of that item. Then decrease in total balance. It affects the decrease in the total balance also. So depreciation is an important chapter in accounting. Without calculating depreciation and appreciation, the accounting process will not come to the correct state. So to make the accounting process sound, to make the accounting system reliable, to make the accounting system transparent, and to make the business entities concern go on, moving on, depreciation has to be taken into account. So this is all about the depreciation. In next session, we'll be discussing on common errors in accounting. Till then, please keep on revising. Only revision is going to help you. Please keep on revising. Our SSO PCE syllabus is Profession Clearance Exam syllabus is very exhaustive. If you go into a book, you will sink there. You will dive there. Coming from out of that one book, Principle of Management, this much very big book. In one chapter, you will sleep. So please, this is not time of experiment. This is the time of strategic planning. And strategic planning is come to the point what comes and what doesn't come. What is the relevant and what is not relevant. And accordingly, the best relevant items I have been bringing to you just for securing higher marks, not securing pass marks. You secure higher marks, for that repetition is required, revision is required. So please keep on revising. We will meet in next session. Till then, namaskar.